Hi there, Emlyn here. I just wanted to spend a couple of minutes looking at some recommendations, or one in particular from Penny Stock Profit, a James Connolly, one of the sort of penny stock newsletters that is sent out. It's quite popular. I've spent a fair bit of time analysing them, and I enjoy analysing other so-called investment gurus to see whether their claims are actually true or not. And I decided to put a quick couple of minute video together to show an example of sort of a typical stock recommendation from these guys or from James at Penny Stock Profit. This particular recommendation came out on the 22nd of February. It was for Smart Holdings, SMHS, and at the time it was trading at 0.015 cents. And James was expecting this to rally substantially over the coming days. He sent a whole lot of blurb, as you can see here, about why this company is fantastic and all the things that are going to happen, and that its alarm system is going to take off and yada yada. But I mean, that doesn't really tell me that anything's going to happen in the immediate future for this company. But he seemed to be very bullish, this company, and this was the seventh stock that I actually analysed. And although this had a bit more of a dramatic move than the other securities I looked at, they were all pretty much typical of this type of move. It is worth noting, before we jump into actually what happened in the security itself, to talk about the disclaimer. And I know that people hate reading small print, but it really is sort of something that you should keep an eye out when it comes to any of these sort of newsletters. And this is a paid-for newsletter, it's not a free one, so people have to fork out a bit of cash to actually get on this mailing list to get this sort of recommendation. So here you see Penny Stock Profit has been compensated $40,000 for a one-week advertising agreement regarding Smart Holdings. So you can probably conclude that James isn't particularly unbiased when it comes to the security, and he actually goes down here to say that he has conflicts of interest, etc., which he pretty much has to say in the small print. But he seems to think that he's got some sort of fantastic system in place that can predict when securities go up. So let's see what actually happened. Now, looking at the Smart Holdings, this is the last month that we're looking at here, and as you can imagine, this is the time that things started to happen in the security. Now, as you can see, the security seems to trade in a fairly reasonably tight range here, and also does pretty ordinary sort of volumes. If I just scroll up a little bit here and close this, and you will see that the average daily volume, and that's including all this big high volume, is about 1.8 million shares, and that equates to about $30,000 a day. So not particularly high volume or value of transactions going on during the day. And this was a long weekend, a Friday and a Monday off, so this is a Tuesday opening up here, and the recommendation was sent out over that weekend to for everybody to get in on board on Tuesday. But what's interesting is that the days before the recommendation, and according to the disclaimer, you'll see that someone's paid them to go and advertise the security, and also from the rest of the disclaimer, you can actually see that James himself can front run this and also sell into the buying interest of his subscribers. You'll notice down here that the volume here, 3.9 million, this is on the Thursday, and when the security starts to rally up. So someone's now starting to put some reasonable buying interest in there, and you're seeing a volume going through of over twice the normal daily volume. And again on the Friday, 2.9 million, again, another 75% or so over the average daily volume. And the recommendation goes out, and then he said that it's closed at 0.015, which is just here. Now, what happens on Monday? As you can imagine, the announcement's gone. Tuesday, the email's gone out. The newsletter, everybody's looked at it and tried to buy in on the open, and unfortunately, you couldn't get set really here. The stock immediately jumped and traded its high within the first minute or two of trading, and then spent the rest of the day falling off. So when we did our analysis, we actually concluded that you would get set roughly about 0.019 or thereabouts. And 1.0195, and from there the security started to fall off, and the people buying into it didn't see the volume they were expecting. The daily volume, 13.7 million, huge volume for that day. So you can see that the securities hit massive volumes going on. Now, if you're a newsletter subscriber and that sort of buying interest came into a security, you should see a security rally substantially. And the reason it hasn't is obviously someone's getting out of a very substantial position and capping the ability of that stock to rally. The next day, people have got into positions. They're not comfortable. The stock is now starting to trade off and panic starts to ensue. And the security starts to head back to its long-term trending price. So it's coming in here, opening at 0.017, so you're already down 0.002 or thereabouts from the position you were set out on the day before, and down the security falls down here to close at 0.0121. A dramatic fall on the day. So that's Wednesday, again on reasonable volume of 5.2 million. And another big volume day where people are starting to go, geez, this isn't doing what we expected. We're down a substantial amount, 6.6 million securities stock trading that day, and the price continues to drop, opening at 0.0105 and down to a lower 0.008. And now it's back to its long-term average, and again the volume of people just closing their positions that have been caught on this big slide all the way down, and now it's just trending out and boring, and the volume dies right off again now. If we jump over the last slide here, you will see that I took a snapshot of the 5 days, and just sort of, this is the Friday and the Tuesday, so there's Friday in here, and you can see people starting, the buying interest prior to the recommendation, and the gap up on the open. So you're getting set here if you're trying to get in on the open, and then the security just trending sort of sideways to off on the rest of that Tuesday day. So just to sort of show you there, what sort of happened on there, and this is sort of a little bit more detail of the buying and what we analysed on the actual security itself over time. And we have a general, I've got no axe to grind because I didn't take a position, I just analyse it. We take an automatic assumption here that if a security gets to 50% or more loss, we automatically close a position. That happened on February 24th. So you're 2 days into your position and you've lost over 50% of the value of your position from the open, which is a pretty dramatic loss in anyone's books, 50% in 2 days. By this stage, if you'd held it open, you'd be down approximately 60%. And this is fairly typical of most of the recommendations that we saw. But if you'd like to see more, then there's plenty of analysis that we've done that you can look at. It's pennystockprofitinfo.org. Good luck with your trading. Thanks for your time and take care.